Hello, this is Mike Swanson. I run the website wallstreetwindow.com, and I'm also the author of the classic trading book, Strategic Stock Trading. It's available on Amazon.com. Now, you're probably watching this video because you found out about it by being on my free email list and got one of my emails. Now, if you're not on the list, you're going to want to get on it. Click the link associated with this video to do just that. Now, we're starting this week in an interesting little situation. The broad market's gapping down a little bit. Gold is gapping up a little bit. But what's really in the news is fallout from Warren Buffett's Berkshire Hathaway annual shareholders meeting. At this meeting, he revealed that he is not buying any stocks in the market. When the market crashed in 2008, he famously bought many stocks. But at the moment, he is not doing that. In fact, it came out that he sold every single airline stock that he owns. And he's had giant positions in airlines for the past couple years. He's owned so many shares that many of the major airlines, he's been an insider. That means you have to own more than 5% of all the shares outstanding. And then when you sell, you got to file the SEC because you're such a giant shareholder. Well, he's owned 6 to 10% of most of the major airlines. So for him to be selling sent shockwaves throughout the airline industry, and many airline stocks are actually gapping down this morning, 6 to 8%. It's actually one of the top stories of the entire day. You can see American Airlines down 11%. So it's crushing people. But last week I did a video. I think it was the last video I did. And I made note of the fact that many small traders are entering the stock market for the very first time. People have a lot of time on their hands, because they're at home, nowhere to go, so to speak. And some of them are taking advantage of that to get into the markets, to tackle trading. And they're rushing into online brokers that cater to small people like Robinhood, where you can get the free commissions. And I actually have a small Robinhood account that I maintain so I can see one thing. And that is the list of the 100 most owned stocks. And this list does change from time to time. The number one stock, Aurora Cannabis, has been number one for 12 months, but it's been one of the worst performing stocks in the entire stock market. But look at this. American Airlines is in the top 10. Delta Airlines in the top 10 too. 6 weeks ago, they were not in the top 100. So when the market fell in March, many small traders on Robinhood tried to guess the bottom in airline stocks. And now we find out Warren Buffett is selling every share he owns or has. So who is right in this sort of situation? Well, most people who open up these trading accounts, especially when they're using solely apps, merely respond to short-term price movements. They don't do any real fundamental analysis, even very little charting analysis. They only look at day-to-day gyrations, and they tend to then focus myopically on what appears to be in a strong rally, but it isn't so much, so to speak. So if we look at a chart of United Airlines here, obviously it crashed in March, but from that low, it had a sharp move up. That sharp move up, people, that made headlines and it attracted people's attention that were looking at the apps. They looked like massive, giant moves. So a lot of people assumed that was the bottom. Or if you a big 10% move in a day, wow. But if you put that in context with where the stock was, a 10% move from the bottom is still, way off the high. The stock is still below the 50-day moving average, the blue line, and dramatically below the red line and green line, the 150 and 200-day moving average. So there's still a horrible downtrend, but people saw that like big gain in one day and tried to hop on without putting that, daily gyration in context. And these very short-term moves that people see on their apps is not what Warren Buffett bases his decisions on. So if we think about the airlines, it would be now a great buying opportunity if this was the turnaround of the industry, if this moment now was the bottom. And if you go to airports, they're empty. Here's pictures of airports around the world, stark empty. Now, if they're about to fill up when the country reopens up, so to speak, then this would be an incredible buying opportunity. But Warren Buffett obviously does not believe that. In fact, he said at the shareholders meeting that he doesn't really know when the industry is going to turn around. Now, I've been following articles about this. I've been listening to a couple analyst conference calls from casinos and airlines, or reading the transcripts because I'm very curious. I'm using it sort of as a proxy for when everything could be completely back to normal. And the CEO of Boeing last week said he does not think things are going to be back to where they were in February for the airline industry for 3 to 5 years. These airports are not going to start to fill up anytime soon. That means airline companies are going to have to cut back on their flights. In fact, JetBlue has announced that it wants to suspend all flights that it's doing to Las Vegas. This is not a sign of an industry that's in a bottom. In fact, an article last week on Axios, headline, "Air travel will never be the same after coronavirus," kind of sums up the situation here. Expect new procedures for luggage check-ins and security clearance. You might even need to have your blood tested to prove you're in good health before boarding. And I saw that in a conference call. There's talk of having some sort of health certification. 9/11 changed travel completely. This is going to change travel completely too. Yes, there's a $50 billion taxpayer-funded relief package, but airlines are going to have to shrink. That means revenue is going to have to shrink. That likely means the stock prices are going to decline over time much more. And Buffett is getting ahead of these future price declines. JetBlue Airways and United Airlines are going to require people to wear face masks. Look for temperature checks to occur. But get this. Online check-in. Passengers might also need to upload a document to confirm the presence of COVID-19 antibodies before they fly. Airport curbside. Passengers could be required to arrive at least 4 hours ahead of their flight and pass through a disinfection tunnel or thermal scanner to check their temperature before being allowed to enter the airport. Wow. Who in the world is going to want to go through all that in order to take an airplane flight? And this is sending shockwaves throughout the entire travel and leisure industry, and Las Vegas is at the epicenter of that. So right now, Las Vegas is empty. It's stories after stories of an abandoned strip. The casinos are shut down. However, the casinos anticipate starting to reopen perhaps before the end of May, but they're really aiming at June as a reopen date. However, they're not all going to open up. And Las Vegas websites are talking about this. This is a Las Vegas Advisor. They reported that MGM is planning to only open up New York, and the Bellagio, and keep the 8 or so other casinos closed in order to see how things go. And not only that, but only a few of the hotel rooms are going to reopen. And while the restaurants will serve food, you won't be able to go to them. It will be carry out or room service only. That's going to be the vacation experience for now. Things are not returning back to normal. But the real shocker is what's happening in Macau. Macau is has just as many casinos as Las Vegas does. It's in Asia, and it shut down in February and then reopened in March, but revenue is down 97%. 97%. Nobody is going despite the reopening. So that's where we are. Complete devastation with no real certainty of when this is going to end. I looked at an analyst call with Wynn, and they said that we're reopening in June. They're anticipating people coming and driving from the West Coast and surrounding states. However, they do not expect people to fly. They're hoping people will begin to fly to Las Vegas in September, but they have no confidence in that. It's merely a hope. And again, this is why the airline industry is in trouble. This is why I believe that these people in Robinhood that tried to guess the bottom did so prematurely, and Warren Buffett knows much more and is a much more serious player in the markets than someone simply trading with an app with very limited information. Now, the thing about the markets is they do provide incredible opportunities to make money. But to really do it, you have got to have a strategy. You can't just buy something because you see a headline or you see that something is up. You have to think about trends. That means fundamentals or long-term charts, and then aligning your trades with what the big trends are. So personally, one of the ways I do that is with stage analysis. To make a long story short, I look for stocks above the 200-day moving averages in sectors beating the market. If you want to beat the market, you got to be in the sectors beating the market. So while the airlines, have collapsed, and it's difficult to make money in them because they're lagging the market. They fell more than the market did during March, which was a massive warning. And now they're, the rally fizzled out. They're lagging the market again. But here's Newmont Mining, a stock that I own that's beating the market. It didn't fall as much as the market in March. It's above its 150 and 200-day moving average and 50-day moving average. It's poised to gap up a little bit this morning because gold is up once again. Gold also is beating the market averages. If you want to beat the market, you want to be in what's beating the market. It's as simple as that. But you can identify that not by looking at a daily gyration on an app, but by looking at the chart going back through time, and the 200-day moving average helps you analyze that situation fairly easily. But I also like to think about fundamentals, and this is a market now that is risky. It has risks to it. That's what the March drop tells us, and things are not returning back to normal. So the good, the good places in the market are few and far in between now. That's what you have to focus on. But at this point, I also am more cautious in these markets, and I'm operating like a hedge fund. In fact, I used to run a hedge fund. I've been in the market since the late 90s, and I had co-managed a hedge fund from 2004 to 2006. Now, the first hedge funds would take long positions and then hedge those long positions with short positions. Now, we've had a nice rally in the market over the past couple weeks that has lost momentum last week. And what I'm starting to do is hedge, put on some hedges. And I'm not shorting airline stocks because they've fallen so much already. They're gapping down big time this morning. But I sent out an update to my private power investor members, that's my pay service, about a sector of the market that I think is extremely vulnerable, and I'm starting to take hedges, shorting stocks in that sector. And there's exchange traded funds for that sector that will go up in value when the sector falls. And this sector is one in which this two fundamental trends I'm looking at. One is Las Vegas. I don't think Las Vegas is going to recover for some time, maybe not for 12 months. I just don't think many people are going to go to the casinos there, travel there, and it's pretty simple to figure out. However, I'm not really looking to short casino stocks, but there's other things to take advantage of this dead Las Vegas trend that I see as an opportunity. And there's another trend, that's oil. You've seen oil crash, right? And many oil stocks have crashed, and I don't believe the oil industry is going to turn around this year. However, the oil stocks have already crashed. I don't really want to short things that have already crashed. So what I'm looking at is pockets of the country that are in areas that are going to be hit hard by what's going on in oil, and I'm looking to short a sector of the economy that is going to get hurt from what's happened in oil, but not indirectly. It's not the energy sector. It's the same thing I think is going to get hurt in Las Vegas. The Power Investor members know all about it this morning, but it's a simple hedge. As far as going long, lots of individual stocks that are still doing good. You see what's going on in Newmont. There are incredible opportunities in the market. But it's all about applying your mind to it, keeping your eyes open, seeing what the trends are, and taking advantage of that. The time in which you could just open up an app and see what's up a lot and then buy it and expect to make money, a month from then is over. And that's fine. It's just that I'm trying to encourage so many of these people that are opening up these new trading accounts for their first time to really take this seriously, because there is a great opportunity here for them if they'll take it seriously, not treat the markets, willy-nilly, but really put the work in and the effort in. And it's an exciting time for doing that. The swings up and down, great opportunities for entry points and the right stuff. So anyway, if you are new, watching this video on YouTube, click the link associated with the video to get on my free email list, and I'll be talking with you later.